Two countries are trading oil. Neither of them is America. The oil never touches American soil, but the payment? It's in US dollars. That's not a coincidence. That's power. Right now, almost 60% of global foreign exchange reserves are held in US dollars. Most global trade, from oil to airplanes to wheat, is priced in dollars. Even countries that don't like the United States still use its currency. Why? Because the dollar isn't just money, it's infrastructure. After World War II, in 1944, world leaders met in Bretton Woods. The U.S. economy was intact, Europe was rubble. So they tied the global financial system to the dollar. Later, the dollar was linked to oil trade in the 1970s. If you wanted energy, you needed dollars. And if you need dollars, you need access to the U.S. financial system. Here's how it works in simple terms. Imagine the global economy as a massive marketplace. Everyone speaks different languages. The dollar became the common language. If Brazil sells soybeans to Egypt, pricing it in dollars removes confusion. Banks know how to clear dollar payments. Contracts are written in dollars. Insurance is priced in dollars. It's easier, it's stable, it's trusted. But here's the hidden part. Because the world needs dollars, the U.S. can create debt in its own currency, and there will still be buyers. Foreign governments, banks, and corporations buy U.S. Treasury bonds, not just as investments, as storage. They park their savings in American debt. That means when the U.S. runs large deficits, there's built-in global demand to finance it. When America sanctions a country, it can restrict access to dollar payments. That's not just financial policy, that's leverage. Now the uncomfortable math. When global trade expands, demand for dollars rises. To supply those dollars, the U.S. has to run trade deficits. It imports more than it exports, so dollars flow outward. In other words, the world's demand for safe dollars pushes America to consume more and produce less relative to others. It's a strange loop. The U.S. gets cheaper imports and cheaper borrowing, but it also builds debt, massive debt, over $30 trillion, and yet investors still line up to buy it. That's the irony. The more uncertain the world becomes, the more people run toward U.S. assets, even during crises that start in America. But this system isn't magic, it's confidence, and confidence is fragile. Countries like China and Russia talk about trading in other currencies. Central banks are experimenting with digital alternatives. Some nations are slowly reducing their dollar exposure. It's gradual, not dramatic, but it's happening. If the dollar ever lost its central role, borrowing would become more expensive for the U.S. Sanctions would lose bite. Global trade might fragment into regional blocs using different currencies. For now, the dollar remains the quiet backbone of global trade, invisible in daily life, enormous in consequence. So the real question isn't whether the dollar is powerful, it's this. How long can one country's currency sit at the center of a world that is becoming less willing to orbit around it?